Welcome, everyone, to the Neptune Alternative Edge Report, your source for cutting edge insights into the world of investing. I'm Olivia Vaz. You can call me Vaz, and I'm excited to guide you through the geopolitical, financial, and macroeconomic trends that shape our investing today. In each episode, we dive deep. I mean, deep into market moving events and emerging ideas, from precious metals to the latest in cryptocurrencies. We've got the insights you need to stay ahead of the pack. Get ready for exclusive talks with industry trailblazers and thought leaders who spark this fresh perspective. Buckle up, everyone. Let's explore the alternative edges of the market because staying informed, well, that's your greatest edge. Let's introduce our very own Chris Blasi, founder and president of Neptune-GBX. We're going to weigh in on the peculiar case of gold. Chris, welcome.
Welcome, Vaz. It's great to be back with you. It's been many years.
Chris, it has been many years. And believe it or not, everyone, the last time Chris and I talked, gold was $1,200 an ounce. Can you believe it? Chris, I remember you being resolute that it would still go higher. Fast forward, we're at another all-time high. Is it finally time to cash out?
Absolutely not. You know my position back then. Actually, you had interviewed me a couple times, like 5-6 years ago. I laid out the case for what the drivers were that were going to continue to propel gold, regardless of short-term moves, which unfortunately spooked a lot of investors out of the market and caused them to miss what's happening. But the drivers for gold is really quite simple. And I actually think some people, the simplicity of gold scares them away. They're looking for something that's more complex and harder. At the end of the day, gold is money. And it is. And what we deal in is our fiat currency, which is measured against gold. And everyone is using a fiat currency across the world. Everyone is putting debt into the market. But we're interested in the US dollar's price of gold. And gold is tightly correlated to the growth in debt. And we know that the US, it's been reported, is adding to the debt to the tune of $1 trillion every 100 days. So the only threat to gold, in my opinion, is that if we actually turn back and go to balanced budgets and fiscal, discipline and responsibility, and I don't think anyone believes that's going to happen. You do not hear politicians talk about, balancing the budget anymore. You'd look silly. So that being the case, the driver for gold, the growth of our debt, the printing of money, I believe is still firmly in place. And regardless of what may happen on the short term, because gold's, fast rise in the last several months, intermediate, long term for sure, in my opinion, it's still on its way up.
Well, Chris, you obviously have a great track record with that. You have an edge, obviously, on predicting the movement of gold. And Chris says it's still going up. But it's believed that U.S. investors like yourself, like some folks at home, determine the direction of gold prices based on their participation of the gold market. Is that true?
Well, that did track that way for years, right? So they would look at the flow of funds in the precious metals ETFs, and the price of gold for years was tightly tracked. So it looked like as the flow of funds went in the ETFs in the US, so went the price of gold until 2022. And then there was a complete divergence. The flows were generally out of the US ETFs, and the price of gold started moving up aggressively. And that can be tied to, what really is the weaponization of the US dollar. Following what they called, at least the Russians called, the special military operation or the Ukraine war, when Russia got heavily sanctioned and the rest of the world got very spooked and frightened by the ability to be sanctioned and the weaponization of the dollar and the SWIFT system, they started lightening up on US debt and going more heavily into gold. Now, these central banks in the world were buying gold prior to 22, but they just increased the rate of purchase. And this went on for 2 years. Flow of funds generally going out of US ETFs and foreign central banks predominantly increasing their gold positions, driving the price of gold higher. And then finally in 2024, the US, I guess, I don't know, capitulated. And now they're turning, and now you're getting a flow back into US ETFs. So this is a decoupling, right? The US being able to kind of lead or determine where the price of gold is going, that's decoupled. And now gold is truly moving globally and on macro matters.
So, guys, you think the only way the US dollar could be a weapon is a paper cut. But no, the US was weaponizing it even further, and it did impact our gold prices. All right, Chris, crushing it at true or false so far. Let's keep it going. So, we just saw a chart of the US versus global gold buying that was dated back in 2022. Who's been buying?
So predominantly, it's what really moves the gold price is not retail investors. It's going to be central banks of the world and sovereign wealth funds. Um, Actually, the move kind of away from U.S. debt began in 2013 with China. China saying that they need to lighten up and they can't have so much exposure to debt, and they began lightening up on their treasury holdings. But that accelerated aggressively again in 2022 with the sanctions. Now, there were countries that were sanctioned prior to 2022 and it didn't have the impact it did after 22. I mean, North Korea and Iran have been sanctioned and cut out of the SWIFT system, but they were not players in the world, meaning they weren't exporters of critical commodities and such. But then with what happened with the sanctions on Russia, that really spooked the world. And I don't think that genie's going back in the bottle. So, since then, there's been an acceleration to kind of, people use that term de-dollarize, but, lightening up on holding treasuries, becoming more independent, and they're doing that from a reserve perspective through gold. And individual investors are obviously able to capitalize on that and have. And so if they have, wise enough to get a position in gold, they're enjoying this too. So again, gold is a very macro investment, right? You can't look at it like a stock. And at the end of the day, gold is real money and it is calibrated in fiat currencies around the world, and they're all devaluing versus gold.
Yeah, and like you said, there's some secret investors in the world in gold. It's the central banks, and sometimes it could be hard to read, especially when you're talking about China's central bank, et cetera, et cetera. But let's dial it back to the individual investor. I'm sure some of you at home are gold investors yourselves. Chris, what is your strategy going forward?
So obviously, I've been a holder of gold and silver for a long time. I continue to maintain those positions, and I'll continue to add to them. In my personal opinion, individuals should not be spooked. Again, you'll hear, and this is completely incorrect assumption in my belief. Oh, gold is at a top, right? Because it's here. I mean, when I came in this business, our first trade was at $289 an ounce. This is in 2001 and 2002. And back then they said, well, gold can never breach 800 because that's what gold reached at its prior high, right? And that bull run of the 70s ended in 1980. And that was based on nothing, right? It's just a number. Again, the driver for gold is the creation of debt. And as long as that continues to create, we are not at a top. And what I believe investors also need to focus on is you have to really think for yourself. There has not been what I would say in the mainstream good advice or a good understanding of gold, which has been shared with most investors from following traditional mainstream analysts and advisors. So you really have to make your own decision. And I think you need to follow sources that are a little more objective and understand gold better.
Well, Chris, that's why we're here. And you heard it here first, everyone. The more countries spend, the more you can invest in gold.
And I just want to add one other thing. Again, because of we'll say the information, right? We're in this age of, we'll call propaganda, right? Everyone's head is spinning with the amount of information and disinformation that appears to be coming out. There's a great example of the mainstream take on gold. In 2015, the Wall Street Journal put out a piece, and they called gold a pet rock. Now, actually, when you think about it, that's kind of silly. That's kind of childlike. I mean, the Bank of International Settlement, the central banks of central banks, deem gold and classified as a tier one asset. The central banks of the world hold gold. as a reserve asset. So to call it a pet rock is actually quite silly. But what happened since that piece came out in the Wall Street Journal? Well, gold's gone up 139+%. So again, that's just a really good example of why investors need to think for themselves in this critical asset class.
Exactly. Chris, I'd love to retweet that with those facts from the Wall Street Journal. Pet rock? Nah. More like our best investor. Chris, thank you so much for joining us today. Look forward to talking to you more about gold and that fresh perspective. That's what we're looking for, folks. And that wraps up our first episode of the Neptune Alternative Edge Report. Make sure to subscribe for future shows and leave a comment. We'd love to hear from you. Thanks for joining us.